I'm Anthony Smith with HFG Trust, and you're watching the Chart of the Week 2-minute video. This week's chart is a 5-year history of the yield on 10-year Treasury Inflation Protected Securities, or TIPS. And as a quick reminder, TIPS are designed to protect holders from inflation because the principal amount is adjusted upward based upon the consumer price index. So we can call the yield on TIPS the real yield, or yield after accounting for inflation. That yield, if we can really call it that, is at a record low right now, negative 1.17%. The bond market is trying to tell us something. We just have to listen. Low bond yields typically indicate that the bond market has a gloomy outlook for the economy. Because if collectively bond investors thought that economic growth and inflation were ramping up, why would they bid up safe securities yielding nothing? But let's turn specifically to TIPS yielding negative. Investors are locking in a loss of purchasing power for the life of the bond. That's what negative real yields mean. This has had and may continue to have huge implications for riskier bond markets and the stock market. Let's take Mr. and Mrs. Jones, for example. They are confronted with a guaranteed loss of purchasing power in high-quality bonds, or increasing their exposure to stocks, which at least give them a chance of beating inflation. So the Joneses and everyone else are doing this mental math, which is leading to more and more money bidding up stocks, which helps to explain today's high valuations in the face of some economic uncertainty. That's it for now. Thanks for watching. We'll see you next week.